Jonathan, let me start with you. A lot of focus on how Munger and Buffett invest, looking for attractive valuations on stocks. Can their approach be replicated right now?
Can their approach be replicated? Yeah, it can be. But what differentiated, and it is a great quote, Buffett once said that if he had just listened to Ben Graham and not Charlie, he'd be a lot poorer. And Charlie was an important teacher to Warren in the fact that he told him to invest in high quality companies at fair prices instead of doing the cigar butt type of investing that he was doing before. So that was a huge influence on Buffett's and Berkshire's investment success.
Jonathan, did Charlie Munger change your life? Is that why you got into this business?
I mean, there's a lot of different reasons why I got into business, but Berkshire Hathaway was an inspiration. I mean, what they built was fantastic, and it's never going to be replicated again. And he was kind enough to write and publicly speak about all of his wisdom and share it with people, and that's something that I'm grateful for. And he inspired a whole generation of investors.
At the same time, I gotta say, Steve, bringing you into this, there are a lot of value investors out there, but it's not what's sort of trendy right now for sure, right? Like growth stocks have been outperforming pretty consistently. So how do how should we think about that then, the legacy of value investing when growth is so dominant?
Well, here's the key, Julie. One of their biggest investments is Apple, which is a growth stock, but it's actually, I think, morphing to a value stock in front of our eyes, but it's still priced like a growth stock. So you've got both aspects of it. BYD was a value stock was a growth stock that he bought at value prices. I think so. That's really, to me, in many ways, the key is finding the opportunities where there are growth stocks being priced like value stocks. And Munger specifically was terrific at that, alongside Warren Buffett. Remember also, I always appreciate the Mr. Inside guy, somebody who spent most of his career as sort of Mr. Inside. I like that he was Mr. Inside to Warren Buffett's outside, and sort of the guy who could propose things to him without fear of conflict, or the guy who could say no to him, which there were probably many people who could say no to Warren Buffett.
Jonathan, let me go back to you. Charlie Munger, of course, not here, passed away, but Warren Buffett, once he leaves for whatever reason, is there another group of investing legends that you look to? The reality is these two folks have trained generations of human beings on how to invest. Who takes that mantle now?
No one. They are in a class by themselves. They not only were great investors in buying pieces of paper, they bought entire companies and businesses and put them together. And their legacy is going to be this company that's built to last for generations. But there's no one investor who's going to take the Charlie Munger or a Warren Buffett, have that level of influence. We lost a legend.
Well, and it's difficult to imagine replicating buying whole companies, for example, because the size of companies, the economy has changed, particularly in the U.S. But Steve, both Buffett and Munger have talked about it's really hard to find those good values right now, right? Munger has talked about things being very overpriced. So what are investors to do then, even if they did want to replicate that kind of activity?
Well, there's a couple of ways to unpack the question. First of all is valuations are high. And so when valuations in general are high, there aren't a lot of values by definition. Whether or not value stocks are out of favor or not, even they're historically on the high side in terms of pricing. Secondly, they created a lot of, I'm not going to say imitators, but they inspired a lot of people to play a similar game. We have trillions of dollars allocated to private equity or strategies that use sort of similar buy the company mentality. And so there's a lot more competition for them than there was when they started. Think about even now, some of their bigger names some of their more recent large investments, these are big companies because they're investing such huge amounts of money that they can't necessarily buy, find these small undervalued companies. They need to find big companies that the market has overlooked, find something different about them. That's really not easy to do, especially when you're talking about such huge numbers as the size of Berkshire Hathaway's portfolio.
Steve, last word to you. The current debate in the market seems to be when the Fed is going to cut interest rates. Now, if you talk to Warren Buffett and Charlie Munger, both of them would probably say, we don't give a crap. We're holding these companies darn near forever. An investor watching Yahoo Finance right now, should they take that approach? Forget what is happening in the markets from day to day. Buy shares of a Coca-Cola, American Express, if they have wide moats around their business, and hold it for 50 years.
If your time frame is that long, sure. I mean, again, the good and the bad thing is we're talking about a man who died at 99 years old. God bless him. He was doing what he loved for decades, and unfortunately, Warren Buffett is not that much younger. Father Time remains undefeated, sadly. But if you're a very long-term investor, if you're a young investor with a long time horizon, you should just be thinking about what companies might be around for 50 years. And even so, and it's not the hot companies all the time, because if you look at what the market loved 50 years ago, many of these companies are not in business. These guys found the companies that would have the lasting track record. So if you can find them, you hold on to them for dear life. And it doesn't matter if the Fed's going to cut rates in May or June or July. It matters whether these companies have the staying power and the earning power and the business acumen to be the investments for you for the long term. If you're of advanced age watching this, well, you have to be a bit more short-term oriented.
Yeah. Thanks to you both so much. It's great to see both of you. Jonathan Boyar, president of Boyar Value, and Steve Sosnick, Interactive Brokers chief strategist. Thank you.
Thank you.